All right, so now we're going to work with our accounting equation, right? Assets equal liabilities plus stockholders' equity. And so if we know two pieces of the accounting equation, we can figure out the third piece. So let's say our assets are 10, our liabilities are 6. Okay. So then that means our stockholders' equity must be 4, right? Because this side of the equal sign is 10, so liabilities plus stockholders' equity also have to equal 10. Let's say we didn't know what our assets were, but we had liabilities of 5, stockholders of equity of 10, then we would know our assets had to add up to 15, right? Let's say we knew we had assets of 15, we didn't know what our liabilities were, our stockholders' equity was 3, right? We could subtract, we would know our liabilities had to be 12, okay? So that's how our accounting equation works, okay? So let's take a look at specific transactions and show how they fit into the accounting equation, how the accounting equation changes. So our first transaction here, Vega deposited $9,000 in the business bank account because Carmen Vega is starting the business, Customer Service Corporation. So she deposited $9,000 to start the business and she got shares of stock. So we are doing the accounting for Customer Service Corporation. We are getting the $9,000. We are issuing the shares of stock. So we're getting $9,000. Our asset, cash, is going up. Stockholders' equity, the common stock, also goes up in that transaction. Let's say the next transaction, we paid the current month's rent on the office. So if we're paying for something, that means our cash is going down. So we're going to put minus $1,200 under cash, and we're paying rent, so we're going to put $1,200 under rent expense. We know expenses make retained earnings go down, so that's why we'll subtract the total of the rent expense when we're trying to see if our accounting equation balances. But expenses don't go down. If you incur an expense, it's been incurred. Expenses are only going to go up, right? Same with revenue. If we earn the revenue, revenue only goes up, okay? Dividends only go up. But we can see dividends and expenses, their effect on the accounting equation is to subtract. We subtract the total. So now what we also want to do is we want to see the balance. We want to see what the totals we have after we have these two transactions. So in cash, $9,000 minus $1,200, right? You could do mental math. You could use a calculator. I'm going to show you how to use Excel because you're going to be doing Excel problems throughout the semester. So you hit the equal sign to tell Excel you want to do some math. And then I'm going to click on the 9,000. And since I put it in as a minus 1,200, I'm going to add the negative 1,200. So I do a plus, I click on the 1,200, I hit enter. There's my cash balance. That's how much cash I have after I pay my rent. Now my accounting lab is going to make you put zeros on the lines where there is no balance. So we're going to do this here to kind of help you practice for that, because it's something that students kind of get frustrated when they're being marked wrong on my accounting lab and they can't figure out why. So follow the directions for the zeros. We only put the zeros on the balance line. We don't put it on the transaction line. All right, next one. Transaction C. We purchase a computer on account. So we're getting a computer. Our asset computer is going up by $7,000. We didn't pay cash for it. We're getting it on account. We're going to pay the vendor later, so we have a debt, a liability, accounts payable. So now we can bring down our balances. We got $7,800 in cash still, 0 in accounts payable, 0 in supplies. Now we've got $7,000 in computer, $7,000 accounts payable, $9,000 common stock, 0 dividends, 0 service revenue, $1,200, 0. Okay. So now we can get to transaction D. We purchase supplies with cash. So we're getting supplies. So we're going to put 600 under supplies. And we bought them with cash. That means our cash went down. Okay. So again, I'm going to use Excel to get the balance in cash. Equal, click on the 7,800, plus, click on the minus 600. Whoops, that's not what I wanted. Yeah. So the 7,800 plus the negative 600. Oh, I'm still. All right, so I did my formula wrong. So equal, click on the 7,800 plus, click on the minus 600, 7,200 in cash. Okay, bring down the 0, bring down the 600, bring down all the rest of the balances. All right, so now that brings us to transaction E. We received cash for services performed. So we got cash. Cash goes up. We put 800 under cash. We got the cash because we performed services. When we perform services, we have service revenue. So now we can show our balance in cash, the 7,200 plus the 800. Now we've got 8,000 in cash. Bring down the rest of our balances, including now we've got 800 in service revenue. On to transaction F. We billed a client for services performed. So again, we perform services. So we're going to put 1710 under service revenue. But we didn't get the cash for it. Our customer owes us. So when our customer owes us, when we bill them, right, we put 1710 under accounts receivable. So now we bring down our 8,000 in cash. Now we've got 1710 in accounts receivable. Bring down our other balances, and now for service revenue we had 800. We're adding 1710. So 800 plus, click on the 1710, enter. Now we've got 2510 in service revenue. Bring down our rent expense. Bring down our salaries expense of 0. Okay. Next one, G. We paid salaries with cash. So we're paying, so cash is going down by 920. And then salaries, that's an expense of the company. So we're going to put 920 in salaries expense. And again, salaries expense only goes up, but its effect on retained earnings and therefore stockholders' equity is a minus. So we subtract the total of our salaries expense balance. So now let's get our new balances. 8,000 plus the negative 920, enter, 7,080. We bring down all of our other balances, and then when we get to salaries expense, we bring down the 920. Okay. Now let's go to H. H, we received a partial payment from the customer we billed in transaction F, right? So transaction F, we billed a client for services performed, right? Service revenue went up, accounts receivable went up. Well, now we're getting 210 from that customer. So since we're getting cash of 210, cash goes up by 210. Since the customer's paying on account, their account receivable goes down by 210. So now we've got cash, 7,080, plus the 210. We've got cash of 7,290. Our accounts receivable, 17,210, minus 210 is the same as plus a negative 210. So we've got 1,500 in cash, and now we're just going to bring down all of the rest of our balances. All right, so now transaction I. Now we made a partial payment on the computer we purchased in transaction C. So transaction C, we purchased a computer on account. So here when we bought the computer, we had an account payable of 7,000. Well, now we're paying the vendor 1,000 towards what we owe them. So in transaction I, cash is going to go down by 1,000. And the accounts payable is also going to go down by the 1,000. Our debt goes down when we pay some of it off. So now our balance in cash. is 6290. We're going to bring down our other balances. Our balance in accounts payable is the 7,000, right? Equal, click on the cell, plus, click on the minus 1,000 cell, enter. And then we can just bring down our other balances. All right, and then our last transaction, we paid dividends. So if we paid, that means our cash is going down, minus 250 to cash, and then we're going to show 250 in dividends. And then we can get our final balances. 290 plus the negative 6,040. Bring down all of our other balances. Now we've got 250 in dividends. Okay, so here, let's say this is the end of their first month of operations. Here we have our ending accounting equation. And we can see that our accounting equation balances. We can add together all of our assets. So you can add them all together. Okay. And then on the other side of the equal sign, we have to pay attention to the sign. So it's the accounts payable, the liabilities plus the stockholders' equity. But to get our stockholders' equity, remember, dividends is being subtracted and our expenses are being subtracted. Okay, so we can do equal 6,000 plus the 9,000, but then minus the 250 plus the 2510 minus the 1,200 minus the 920. Okay, and so we can see that equaled 15,140 equaled the 15,140. A shortcut, an extra tool you could use instead of doing, and you could, this only works on the asset side since we're totaling them all up. You can do equal and then type in sum and a parenthesis and then highlight all the things you want to add up. Close the parenthesis. So that's kind of a shortcut to adding things up. We couldn't do the equal sum on this side because some things were being subtracted. The dividends and the expenses were being subtracted. But we can see assets do equal liabilities and stockholders' equity at the end of the period. And that should have been true on every single balance line. You should have been able to add that up and make sure it equals. So I hope this helps you get an idea on how we need to be recording business transactions and how they affect the accounting equation.